It's I think, Mumbai-based real estate company.
Yes, and the IPO is opening today. So there's no dearth of IPOs now in the market. And real estate, we're getting an IPO after a long time. It's been really long that we did that. So the IPO opens today and it shuts, of course, on 19 September. The price band is around 121 to 128 rupees a share. It's a decent size IPO. The issue size is 410 crore rupees. There is no offer for sale by the promoters. And post-listing, the market capitalization is expected between 2,300 to 2,400 crore rupees. The current promoter holding is around 80.17%. So post-listing, the promoter holding will come down to 66.3%. So it's largely the promoters who will be seeing some decline in their holding as well. The usage of proceeds, they'll be developing ongoing and upcoming projects. There'll be general corporate purposes and funding acquisition for future real estate projects as well. Now, about the company, as you pointed out, it is a Mumbai-based real estate player, and they're both into development of fresh projects and redevelopment as well. So redevelopment continues to be the big theme for Mumbai-based real estate players as well. I think they get it in equal amounts, both from fresh projects and redevelopment projects. Now, the ticket size per unit for them on an average, they have just given a data here. It increased to around 2 crore rupees versus 1.7 crore rupees that we saw in FY22. That's the average that they've seen. And they mostly cater to suburbs, that is the Eastern MMR and the Western MMR region, where Western MMR is around 89% of their sales. Eastern is very less, it's around 11%. But do remember, a lot of redevelopment opportunities coming in the Eastern side as well. In terms of their financials, they have done volumes of around 0.19 million square feet, which is much lower than the peers that Mumbai real estate sees. Collections at 258 crore rupees. The total units sold has been 258. That has been a sizable jump from FY22 levels. The balance sheet now, the operating cash flows have been lower, though the cash flow from all the activities has been in the positive, but operating cash flows have been negative in FY23. They have reduced in terms of losses from FY22, but this is something that you should keep an eye out on, that the operating cash flows have been in the negative. In terms of NAV, if we compare it with other real estate companies, because that's the best way to compare a real estate company, not via PE, because the P&L is very lumpy. The company has the lower NAV on the lower side, 21 rupees, that is the net asset value per share. Its Keystone is 157. Godrej Properties has it very high. Of course, it's a stock which trades at rich valuations, where Macrotech at 180 and Suraj Estate at 148. Risks now. Now, remember, the construction costs are around 78% of their total revenues, and they have no long-term agreements with any of their labor and key materials. So any fluctuation there, any delay there is something that could increase their cost. They've already seen that increase in FY23 versus around 40% earlier. There's reliance on third-party contractors for construction of projects, which they do not control directly. So there could be some delay as well. So yes, it's a decent sized project, but we'll have to see the execution because the size is very small here. But since they're catering both to redevelopment and development, there could be a potential of a bigger land bank and a bigger pipeline as well for the company.
Okay, its market capitalization will be 2,400 crore rupees. So much smaller than, say, even a Keystone Realtors, whose market cap now stands at closer to 8,900 crore rupees. So a Mumbai-based real estate company up for grabs in terms of opening up IPO. We'll slip into a break on that note. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.